Good afternoon, everyone. Thank you for staying with us for another amazing session. We have the honor to have an amazing set of panelists, and Adam will do also an amazing job moderating the session. So that's all from me. Thank you for being with us. And Adam, the stage is yours.
Thanks very much, Daniel, for the invitation and for setting expectations high for this panel, which actually I know our experts will definitely be able to deliver. So my name, for those of you who don't know me, is Adam Gagen. I head up government affairs for American Express for Europe, Middle East and Africa, based out of London. And so I have the great opportunity and privilege of getting to engage some of the experts across that region on a number of interesting innovations in payments, and obviously DLT, and what we're going to talk about today, central bank digital currencies, are one of the key trends. I'm very privileged to be joined by some real experts in this space that can help talk about both the political challenges in bringing CBDCs to market, the sort of policy and regulatory implications that need to be thought through by governments, and then also the sort of macro prudential and technical challenges for central banks to actually bring these things to life. And so to introduce my great colleagues here, we have obviously Dr. Jörg Kukies, who was up until very recently the State Secretary for Finance in Germany, has now been elevated to actually lead for the new German government, all EU and financial affairs supporting the Chancellor. So he'll be setting the scene for one of Europe's leaders as a key market. Secondly, I'm very happy to be joined by Abir, who is the Deputy Governor for the Bank of Israel, who again is one of the most innovative central banks that we see around the region, but is also clearly moving very fast in the CBDC space. And Andrew is the person who's actually spearheading the efforts to make that work in practice. So has the challenge of delivering on the great expectations of both the governor and the government in Israel. And then certainly last but not least, we have Peter Kerstens, who again, many of you will know, is one of the most innovative thinkers we have in the European Commission and leads on a lot of the work that DG FISMA and other key interlocutors do there to drive forward innovation and make sure that Europe is not left behind, but in fact actually defines and leads the charge on these great new trends that we're seeing, central bank digital currencies being one of them. It's going to be an exciting day today. As you may have noticed, 2021 has been a busy year when it comes to private crypto activity. We've had all-time highs for digital assets. We've had all-time highs for use of stable coins. The volume of transactions, I think, in 2021 being 1,000% over 2020. And even though they're just at 0.5% of the total payments volume globally, the opportunity for that to increase year over year is clearly there. And in and around those core areas where DLT is being used in the financial system, there's a myriad of new use cases and obviously associated efforts in NFTs and in loyalty and in digital identity that clearly will have major impacts on governments and the financial sector. What we want to talk about today, though, is the fact that that private sector innovation is clearly happening means that governments potentially need to now react. And certainly we're seeing regulation on private crypto assets picking up around the region. And again, you will have heard some of that talked about in earlier sessions. And what we're going to talk about today is potentially the second big reaction, which is a challenge to governments and central banks to maybe be innovators themselves, and particularly over this fantastic new innovation around central bank digital currencies that offers so much promise and so much opportunity, while probably quite a few challenges as well. So the way we're going to try and address this today is really to talk it through in three sections. First, essentially, why do we need central bank digital currencies? What are the problems we're trying to solve? Secondly, what do we really mean when we say a central bank digital currency? What are going to be its functionalities? How's it going to work? And again, does it really all need to be done just by the central bank? And then lastly, how is this all going to happen? How's it going to come to market? And again, how quickly potentially are we going to see this real and live? And are we going to see the speed of action we're seeing in other regions here in Europe? And so that's what we're going to try and run through to kick us off and essentially figure out how innovative each of my speakers is today. I thought I'd start with a quick tour de table to find out, again, what your real personal experience is when it comes to payments and new use cases. So maybe Dr. Kukies, starting with you, give us a sense of what you experience in daily life. When was the last time you used cash? Maybe how many great phone apps do you use daily? And then also, have you ever actually bought anything with a DLT asset or token in terms of the last few months and years? Over to you, Dr. Kukies.
So the latter the answer is yes, but only on an experimental basis. because I participated in sort of a test trial run. So I would say I get half credit maybe for that, because it was only a sort of an artificial transaction. But at least I'm trying. Usage of cash is going down massively, and I'm very happy that Germany, maybe the only sort of positive impact of the last months of the crisis is that due to the hygienic concerns, all of a sudden in Germany, in bakeries, in taxi cabs, you can all of a sudden pay with cards. So that's completely new. Has never happened. Germany was a very cash-focused society. On a relative basis to the rest of the world, we still are, but on an absolute basis, you're able to pay digital and with cards now in places that never were possible before. So the adoption rate of NFC has increased massively, and I'm taking heavy use of that.
Great. So as you say, a silver lining from the very painful few months, if not years now, we've all been living through. And maybe, Andrew, over to you next. Israel, one of the more innovative jurisdictions in terms of generating companies, particularly in the payment space. What's your daily experience there in terms of cash, great mobile apps, and then maybe NFTs?
Well, on the cash, I think it's rare that I will do more than 1 or 2 transactions per week using cash. The strange thing, though, is if I go out, I still feel naked if I don't have some cash in my pocket, even though it's very unlikely I'm going to use it. And I think that's more of a generational problem. My kids have no such problem. I don't think they have cash in their pockets, and it doesn't seem to worry them. But for me, going out without the cash there still feels a little bit strange. In terms of the use of payment systems and cash in Israel, we're a sort of bipolar society in that there's the large section of society that's using all the new payment systems out there, the apps and whatever, and will rarely use cash. But there's still a fairly large part of society that is using cash as its major form of payment. So it's not that we've reached a cashless society, nor do we actually look to reach a cashless society. We still think cash has a role to play, but we differ between two sort of use of cash by normative people. That's fine. But a large part of the cash that's been used in recent years and is out there, it is held by more problematic elements of the population.
I always find in Israel, it's one of those great innovative, I guess, origin places for a lot of companies. But the day-to-day experience, even when I'm using a card or finding cash, as you say, seems quite polarized sometimes. Peter, maybe over to you. Brussels, we all go there quite a bit. Again, use of electronic payments has got better, certainly probably during the pandemic. Has your experience been the same as Jörg and Andrew's?
Yes, indeed. Well, if you ask me personally, the last time I used cash, I had to think about it. And it's about 3 weeks ago. I'm a bit like Andrew. I carry cash on me, but I actually rarely use it, because I find it very inconvenient. And the most inconvenient part about using cash is that you have to deal with the change which you get. So I try not to use cash at all. So it's been 3 weeks for me. How many apps do I have on my phone? I had to count. And I would say that I have about a dozen that I regularly use, and then a few dozen that I tried but don't necessarily use. I got way too much junk on my smartphone, but about a dozen I use very regularly. Have I ever bought DLT-based assets? Sold them? Yes, because I don't think you can make policy work in this area if you haven't tried this. And I think I'm beyond the experienced user, the experimental user, getting into the experienced user a bit.
That's great. That's very helpful scene setting, and probably also to be transparent from my side. So yeah, same. I very rarely use cash, right? Unless I really need to, and that's generally when we're on holiday with my wife's French family somewhere in Normandy, where sometimes the total coverage of electronic payments isn't great. And yeah, certainly for my kids, I have a 4-year-old. You know, whenever we play shop, he goes beep whenever he's buying something, as opposed to handing over notes and coins. So yeah, the generational change I think we'll catch. And as you say, I think a bit of experimentation and learning when it comes to NFTs and DLT tokens in the asset area. As with most people, you never buy enough when it goes well, and you always bought too much when you think it went in the wrong way. But that's a great scene setter, guys. And I think that's maybe how we segue into the first section, which is, as you can see, there's a lot of options, a lot of choice when it comes to financial services, particularly payments today. Central bank digital currencies often are seen through a retail or wholesale lens. Again, there's some opportunities that they could maybe bring to solve problems. But from your perspective, what are those problems? Why do we need a CBDC? And maybe first we'll start with you, Andrew, in Israel. From your perspective, what are the problems that the CBDC is going to help solve?
I think the initial comment I'd like to make is if you ask people in the street, they don't see a problem. The person in the street is happy with the payment systems he has. He thinks he has central bank money in his card and in his bank account. He only realizes he doesn't have central bank money in his bank account or in his cards or his wallet when there's an event like Northern Rock in 2008. But for the most part, you ask him, do you need more central bank assets, money? Well, the answer is no, I've got plenty. So I think on the side of the consumer, if and when we do go ahead with the CBDC, we'll have a real job persuading him to use it, because we'll have to produce sufficient value in the product we put out there that will interest him enough to use it over and above the sort of the products he has today. As I said before, we're not looking to replace cash. We think cash continues to have a role to play. What we want to do is to try and introduce more competition into our payment system. Our payment system is fairly dominated by a few players, and there's high barriers to entry. What we would hope a CBDC to be able to do is to reduce the barriers of entry, to allow more players to come in there and have a level playing field against some of the larger players. That's what we'd really look to do, but we still have to persuade the consumer there's something in it for him.
Fascinating. And yeah, I think particularly that challenge of competition, which has always been the case, particularly in payments, because of the network effect, it seems like CBDCs, as well as maybe other innovations like instant bank payments, is a way to crack that nut. Dr. Kukies, maybe from your perspective, again, Germany is going to be probably one of the loudest voices in the room, already is within the ECB, in terms of how quickly we move towards the CBDC and what it looks like. From the more political perspective there, what do you think that's going to solve for, again, German voters and to deliver on in terms of the government's new priorities?
Well, I think I completely agree with Andrew that it's not a foregone conclusion that anyone will actually use CBDC. And I've said this in many fora that I think the focus at the moment is only about the adverse case of wrong way risk, where there's a crisis and everyone flees into CBDC. And thinking about that scenario is completely legitimate and necessary from a financial stability perspective. But from a usability perspective and an adaptability perspective, I'm very happy that the ECB is also thinking about the normal case, i.e., what happens in normal times and how do we actually get people to use a potential CBDC offering if and when it comes. And for that, I think it's absolutely necessary that the central banks also think about the interface to the client, where it's not a foregone conclusion to me that central banks are the best able to provide convenience and innovative power of connectivity to retail clients. So I think the challenge will be for the central banks to find the right place for handing off the CBDCs into distribution networks, into innovation networks that then build around a core of central bank currency. And that's absolute daily business in all other areas where there's always a handover point between the central bank activity and the private sector activity. So I think that delineation will be specified more in this case. The other element that I want to mention is, we've said that many times as German government, we don't think that the limitation to retail CBDC is appropriate. And we also don't agree that we, through target and tips. We have very, very innovative systems, absolutely correct, for Europe, but we still don't have all of the fully specced out requirements of a wholesale central bank digital currency. And I think there's still a lot of work to be done in terms of also the question of where do we make use of programmability of a digital currency, whether it's a central bank currency or a commercial bank tokenized currency. That I think is the question. And again, where's the handover point between the two?
Yeah, it's fascinating. And maybe we'll talk a little bit about the architecture later, but I have heard often, sometimes more off the record, that there does seem to be almost a bottom-up call for more wholesale use cases. And again, the fact that you develop that, whereas it's more of a top-down call for a more retail use case, again, because of some of those points around competition, and also maybe some sovereignty concerns, right? Maybe that's a good way to segue to you, Peter. I mean, you've got to try and, again, keep a delivery in terms of the legislative agenda on MiCA, the new cryptocurrency regulation. You've also, I think, got, as the European Commission, got to engage the 27 governments to make sure what happens on CBDCs led by the ECB delivers on your bigger policy concerns. What's the challenge there? What's a unifying theme? And is it, as Dr. Kukies put out, trying to deliver on those competition, innovation kind of mandates that you feel they have, or are there other concerns, which is frankly, sovereignty? Everyone's terrified of DM. What's the truth of it in the middle?
Well, it depends a bit. There's many drivers for this. On the one hand, there is the innovation itself and the fact that we want more diversified, more competitive payments environment. Not that there's anything wrong from a functionality of the current payment system. Payment systems in Europe work well and to the satisfaction of pretty much everyone. Some people complain that they're too expensive, some people complain that they're too slow, and so on. But of course, people don't necessarily know what they want or what they need until it arrives. I'm often thinking about our ancestors who, when they were riding horses and walking around, if at the time you would have asked them, do you need a car? They probably would have said no. Or 20 years ago, if you asked people, do you need GPS? I remember that when I bought the first GPS, my wife said, why do you buy it? Why do you need this thing? What's the point of it? Or who would have thought that there was any use or any value in social media, or in a search engine, or in electronic commerce, or buying stuff online? People said, no, we don't need that. Yet when it arrives, and when people see the convenience and the advantages of it, they want it. And so while payment systems in most EU countries work very well, that doesn't mean that they're perfect, and you can always improve on them. The second area is, of course, the emergence and development of Web 3.0, so the token-based internet. And there, I do think there's a much stronger need for central bank digital currency, because otherwise, this Web 3 environment will develop fully based on private means of money. There will be no public cash. And that, I think, is not a good outcome. Money is a public good. And if the blockchain economy, the Web3 economy really develops, and I have every expectation it will, I can't prove it, but I expect it will develop, it would be highly beneficial to have a public means of payment for the Web3 environment. And if there is public money available, if there is central bank digital currency available, that will actually encourage the development of the blockchain and Web3 economy, in my view.
And that makes a lot of sense, and that's certainly what we hear and even talk about internally, right? The fact that building functionality and this kind of new Web3 experience, right, of token and attribute sharing, everything from digital identity to real payments to settlement, it's arriving, and figuring out how that we can all hopefully make money in that scenario, but also deliver something new and valuable for consumers as a challenge for the industry and for governments. Just talking again of maybe the politics, because clearly there's some maybe things CBDCs can solve, but there definitely seems to be an increase in the urgency from what we hear from a number of policymakers and central banks. Why is that from your perspective? Is that China and the fact, obviously, the digital renminbi has gone from strength to strength in 2 years, going from a small pilot with 50,000 people to now I think 120 million people having done transactions? Or is it really the fact that private crypto markets continue to evolve? What's a driver, and is it something that concerns you? Maybe Peter to answer first, and I'll come to you, Andrew and Dr. Kukies.
I think that if you look at it from a European perspective, I think the main driver in the change of attitude among central banks was the arrival of, or the announcement of diem. Up until that moment, there were about 60 central banks globally that were researching central bank digital currency, and the research mainly was, well, it's all very interesting, but we don't need it. I'm exaggerating, but that was kind of the summary of the research. And when, at the time diem was announced, you saw this shift because all of a sudden, policymakers and central banks realized that large companies with huge network effects, if they were getting involved in the issuance of private means of payment, that this could be very, very quickly distributed in the market and could overtake public money. And my experience has been that that really was a catalyst for a change in attitude among central banks from a rather not to a rather yes approach on central bank digital currency, much more than the developments in China. Although, of course, we, like everyone else, are looking with great deal of interest, not fear on our part, but interest on the developments in China, because, of course, they have been experimenting and rolling it out already for a longer time in pilots and have huge potential.
It's interesting. Some more the private sector and developments there. Andrew, was that your experience? Do the private sector or the Chinese or other CBDC jurisdiction developments drive your speed, or is it just because you believe it needs to happen now? Andrew, I think just on mute.
Sorry. I think our situation is very different from, let's say, obviously Europe or the United States or China. We're a small open economy and we face different challenges than those other much larger economies. DM for us is not really a threat, actually. It's more of an opportunity to reduce costs of cross-border payments. So it doesn't necessarily be the catalyst that makes us thinking about CBDC. Obviously, also cryptocurrencies is not a catalyst for us. We don't see cryptocurrencies as a payment system. We see it at the best as a very volatile financial asset that should come with a huge warning, sort of public health warning on it. And the people who are interested in using cryptocurrencies, well, they're interested in volatility. So a CBDC is not the answer for them. So really it goes back to sort of what are we thinking in terms of CBDC? It's really for domestic sort of reasons of trying to improve our own payment systems. And the jury's really out there, because one of the questions we keep actually asking ourselves on each sort of feature, you might think of a CBDC, can you do it in your existing systems? Do you need a CBDC? Whether it be a smart contract, you don't necessarily need a CBDC. So we do ask ourselves, can we do it in our existing systems first of all? And then if we think that it could be done easier in a CBDC, then that's another reason why to go for a CBDC. But it's certainly not sort of the catalyst of cryptocurrencies or even sort of the dollar or euro stable currencies.
Fascinating. Yeah, more of almost a fintech attitude from the Israeli central bank, which is always positive to see. And Dr. Kukies, same question for yourself. Again, are developments in China, what we see with private crypto projects, driving the urgency? Or again, is it just because you think now is the time?
Well, I mean, obviously, when it was still called Libra, that was a wake-up call for policymakers, right? Because, of course, it made everyone aware of what could happen in terms of disintermediation. And at the same time, of course, it made clear what potentially the issues around licensing and supervision, et cetera, could be. And therefore, once the Libra, then DM team heard what European policymakers would require, and you can see it pretty much now enshrined in legislative text in MiCA, it probably altered the business case to a certain degree. So in that sense, I'm not surprised that it went the way it went. But the verdict is, of course, still out. And I think, like it or not, the central banks will have to keep this competition from private sector participants in this market in mind, because of course it's a similar topic. If you can establish a stable coin with reliable collateral and access to collateral and valuation and transparency and all of these things, then of course the benefits of CBDC could be offered by stable coins as well. So far, I'm rather alarmed at what we're seeing in terms of quality of collateral, transparency of collateral, access to collateral, and all of these very important consumer protection issues that, of course, also become size of market issues, because if the industry remains opaque with a lack of clarity and a lack of transparency, it will obviously always be limited to a certain segment of the market. So in that sense, the verdict is out on that. On crypto, I think also the verdict is out. I mean, a lot of what is being done in crypto is pure regulatory arbitrage, up to and including arbitraging AML rules that are being implemented elsewhere. I mean, the industry, when we came up with our legislation implementing as one of the first countries in the world the travel rule that does something very simple, namely to oblige both sender and recipient of crypto assets to be able to identify both sender and recipient, there was an uproar in the industry, right? And on the one side, we were surprised. On the other, we weren't, because it's obvious that as long as other jurisdictions still permit transfer of crypto assets without the obligation to identify sender and recipient, there will be a regulatory arbitrage relative to the regulated banking sector. And unfortunately, inevitably, there will be adverse selection and a lot of the illicit activity moving to the lightly regulated. Now, there's been quite a lot of activity at the level of the FSB, the G20. The European Union has now passed legislation on travel rule implementation. So it's just a question of time. But I think every jurisdiction has the obligation to make sure that the highest AML standards are upheld. And then it'll become interesting, and then you'll see whether a lot of the use cases were just pure regulatory arbitrage, or whether they actually also work in a level playing field environment. And I think also on that, the verdict is out at the moment.
Fascinating. Yeah, it's going to be interesting. Once everyone has to play by the same rules, you'll be able to see what's a real innovation and what was, as you say, just an opportunity in the short term. And maybe, I mean, that's been excellent in terms of setting the scene of what the challenges are in terms of why we're going to develop these things. Let's talk about exactly what we're going to develop now. And maybe coming to you first, Andrew, as the central banker on the panel. Are you focused on a retail or wholesale CBDC? And what would be the key functionalities that would need? So is anonymity going to be important? Is the ability to set interest? Is the ability to make sure people can only use it to buy and sell certain things? What are the kind of functional elements of a CBDC that you would find key as you go about this design process?
So for the starting point is, I think we are talking about the retail CBDC rather than a wholesale. It doesn't necessarily rule out a wholesale one, but I think for us, in terms of the local economy, I think there's probably more need in terms of the retail market to increase competition there and lead to more innovation in those sort of areas. So that's the area that we're concentrating on the moment. One thing's clear to us, it's going to be a two-tier model. The last person you want to have dealing with customers is a central bank. I spent the last sort of 10 years of my life running the markets department. I was very happy we only had one client. Central banks are not good dealing with clients, so we don't want anything to do with it. We want the private sector to deal with the clients. And we also want the private sector to deal with the innovation, because we don't think a central bank is the right body to really lead innovation. So if anything we're going to be doing is we're just going to be building the basic rails of the CBDC, and then let the private sector get on with it. And obviously we'll have to have some form of supervision of it, but we want them to be as innovative as possible. And one of the questions I think you sent out to us at the beginning was, you know, are you worried about the disruptive elements of a CBDC? Well, on one point, we want the disruptive elements of a CBDC. We want them to cause change. We don't know quite what that change is going to be. I think this is what Peter alluded to. We don't know what's going to be like it in 10, 15 years' time. We can't imagine it. But we think that the private sector is the right body to do that. There are some areas where we are worried about disruption. We're worried about disintermediation from the banks, people pulling their money out of current accounts. And that will lead to sort of, I think, decisions on paying interest on it. We don't at this point envisage paying interest on a CBDC precisely for that reason, so that there will still be some advantage to hold your money at a bank in terms of pay you an interest rate on it. But we'd want the CBDC to have the ability, at least, that one day we would change our mind that you could pay an interest. But initially, at the starting point, I don't think we'd want to have, and we wouldn't be paying interest on that, precisely because of that sort of fear of disintermediation at the beginning. So those are some sort of starting points that I would think about in terms of how that CBDC would look like.
Thanks, Andrew. And just in terms of that anonymity point, in terms of, again, the use of cash today, that is what a lot of people talk about, right? In terms of why they like cash in their pocket and they go, they buy, they sell. So obviously some problems with that in terms of AML, KYC, challenges over, again, just illicit trade, corruption. From your perspective, is that a question that still needs to be answered in terms of how anonymous these kind of CBDCs could be? You see where the kind of Central Bank of China has landed on that. You see where some of the other pilots are looking at it. Do you have a view yet from the Bank of Israel, or that's still to be determined?
Well, it won't be anonymous. It will have to meet the basic conditions for KYC and AML. That's, I think, pretty straightforward for us, at least. Then the question is about how much information is about the transactions that people do. Who is able to see those transactions? And we actually think it will probably be something that the consumer will decide. He can decide not to have no sort of transparency above the basic AML, KYC requirements, because he wants to have, you know, to keep his privacy, or he may actually want to give up that privacy because he'll get a cheaper product. It may be that a vendor gives him a cheaper product if he can see the data of and use the data of the transactions. So we actually would want that sort of the rails to allow the consumer to choose the amount of privacy above a certain minimal level that he will leave for himself, depending on the pricing of the vendors.
That's great, and almost extending that principle in open finance, open banking today, right? That, you know, you can share a lot more information if you want, actually, even at the transaction level, but you as the consumer should be in charge of it, which I like. Dr. Kukies, maybe next to you in terms of, again, functionality. You mentioned wholesale, obviously, was a focus, not just retail. Are there elements of either the wholesale or retail development from the ECB that you would like to see in terms of, again, what the thing will be able to do?
I think the question of programmability is really one of the key use cases, and whether that is relevant at the level of the CBDC at the core, or if it's in the realm of tokenized commercial bank money, I think is a question for private sector participants to decide. But I think the development of CBDC should be open to this question. We had a working group in my old employer, the German Finance Ministry, together with Bundesbank and some of the most innovative industrials in Germany. The companies came up with many use cases for programmability of currency. And we're now working on the question of, for that to take place, do you need a link into CBDC, yes or no, or is it sufficient just to do that at the level of a potential tokenized commercial bank money? And the verdict on that one is out. But what all of the companies that we spoke with told us is that the ability to settle into central bank currency in a straight through purely digitized format would definitely be an advantage. And some participants also publicly gave quite detailed information on where that goes. So in that sense, I do think in the design, it will be important to have a link between the two. The Bundesbank had a very interesting experiment together with the Finance Ministry's Federal Debt Agency, where we tested a trigger solution where you basically have the conventional path of settlement of the central bank currency combined with DLT settlement of the securities, and there's a DLT-based trigger that then joins the world of the conventional payment system with the DLT world. That's also possible that we use sort of hybrid solutions of conventional and digital. That's also one of the possibilities. So at the moment, we're in exploratory phase there, but these different exploration paths are leading to very interesting insights. I think the other example, of course, is Banque de France, that basically did in a test scenario, right? Not a real world, but already did the whole value chain of issuance to trading and everything in digital currency, including the settlement into central bank money. So I think, you know, the experiments in all directions are leading to very interesting insights, and all go into as input into what Fabio Panetta is doing at the ECB. And we're working very closely with the ECB and the teams there, and it's very productive because all of these innovations and interesting ideas are leading to a better result at the end.
That makes sense, yeah. And I think Fabiano's comments just a couple of days ago in terms of how the central banks need to keep pace with what the private sector was doing in terms of that innovation and programmability, I think clearly is something that has strong support across the political spectrum. And just one last question, Dr. Kukies, in terms of the programmability, again, I think people talk about that innovation from the private sector, a lot of exciting things. Is there interest from government as well to use a programmable CBDC almost for social economic policy? So making sure maybe if there's, you know, COVID relief funds in some future crisis, that can only be spent in a certain way for a certain thing to make sure that that is targeted within the economy. Is that something that people discuss, even if maybe no decision has been made, or is that something that's seen as too political, too sensitive?
Theoretically, yes. Practically speaking, you know, a lot of the data protection issues are challenging to navigate, let's put it that way, but definitely doable. But to be honest, most use cases we saw on programmability really come from the more innovative sectors of the private sectors, right? I mean, everyone who's in IoT, everyone who's into machine-to-machine payments directly. Those are the areas where we really saw interesting applications of potential programmability and combination with sort of next generation smart contract technology, and quite a lot of our companies are working on use cases for that. So I think that's quite important and quite interesting.
Great, and hopefully a lot of people who are leading that charge in the broader region and globally are listening to this. So that's a call from Dr. Kukies there to keep innovating, keep coming up with great ideas. And maybe now just over to you, Peter. I mean, the Commission's got an incredibly ambitious agenda on everything from digital identity to open finance, open data, you know, real upskilling of how Europe operates as a digital leader. Where does CBDC fit into that? And again, what's the functionality of a CBDC that would maybe be issued by the ECB or other European central banks to make sure you could deliver on that ambitious policy agenda?
Well, the current focus in the European-wide debate is definitely on a retail CBDC, but there's also a strong body of opinion that says don't limit it to retail CBDC. We also need a wholesale CBDC. Now, of course, wholesale, if that means for use interbank, you can say, well, banks already have access to digital forms of central bank money, so a central bank digital currency wouldn't add anything there. But if you think about large corporates using central bank digital currency in digital form, they currently don't have access to it. If you think about other markets, and so the debate isn't so much, in my view, about whether or not it is a retail or wholesale CBDC, but whether it is an account-based instrument or whether it is a tokenized instrument. And in the design, I'm giving you my personal view on it, and I'm not talking here for the institution I represent, is that its main design features, in my view, for CBDC to be promising is that it has to be usable and has to promote the Internet of Value, Web 3.0. So when it comes to programmability, the central bank digital currency itself shouldn't be a program. It shouldn't be a smart contract, but it should be usable in smart contracts, because it is, after all, central bank money, and that means it has to be universal. It has to be completely fungible. A euro is a euro, a digital euro is a digital euro. I know that technically it is possible to create a digital euro for this purpose, and a digital euro for that purpose, and a digital euro for X purpose. That is technically possible, but whether that's desirable or useful, I have very strong doubts. Just like currently, a euro note or a euro coin can be used for any purpose. But what is essential in the design is that it is usable in smart contracts. And the degree to which it is tokenized and is operating on an interoperable base layer is essential for the usability of central bank currency, digital currency, in these innovative applications, which will not be developed by central banks or governments, but which will be developed by the private sector, by innovative people there who are much smarter than anyone and much more creative than anyone in government or in any central bank.
I maybe challenge the last statement, as I know a lot of very innovative policymakers, but I think all of your other statements were very much 100% on the money. And I think the challenge that we're starting to see is, again, how do we get that speed of action in a lot of jurisdictions beyond what we've already seen out of China and others. Maybe just to finish off this element and start moving towards the how we'll make this happen, and picking up some questions we're getting in the chat. I mean, one of the challenges that's seen is the speed at which central banks can actually bring a new form of legal tender, which is digital and programmable. That takes time. That's going to take a number of years, certainly in parts of Europe. Maybe Israel and other jurisdictions can move faster, but it'll certainly be a while. Is there an opportunity for something like a synthetic CBDC, where the private sector kind of creates almost a stable coin in sort of some public-private partnership, one-to-one backing in a central bank? So essentially this could happen faster than maybe it is going to happen if central banks have to do all the heavy lifting. I know there was a paper put out by a think tank just recently, Dr. Kukies. Is this idea of a synthetic CBDC something that is discussed in Germany, or is that really seen as something which is outside the opportunity?
Well, it's something that when Bundesbank went through its examples was always also taken into account. So I think it's a legitimate element to be taken. You know, we want to be technology neutral, and who knows which solution will actually be taken up by consumers and markets. So I think keeping the synthetic element as one of the possibilities shouldn't be excluded. Whether it turns out to be viable and doable and practicable, I think that verdict is out, but it should be part of the evaluation spectrum. But it's too early to judge whether these synthetic elements are realistic or not.
Very clear, thanks. And Andrew, maybe from the perspective of Israel, again, is the CBDC just going to be the domain of the Bank of Israel, or could you maybe do some partnership with the banks to get something out a little bit faster, which is based more on some sort of public-private DLT system?
I think the problem we face, and as a small country, is that it's difficult for us to go ahead alone, because in the end, we'll want a CBDC that will be able to be connected up to other CBDCs of other countries. So one of the main things we want to be is actually for cross-border transactions. And that for us is a very big issue, because the cost of cross-border transactions for the Israeli economy is very large. So if you think of one area that would bring an immediate reduction of cost, that would be one of the areas. It may not necessarily have to do it through a CBDC. Again, it could be through connecting up RTGS systems. But it would be difficult for us to go ahead and create a CBDC and create the infrastructure of it without knowing what was happening in the rest of the world. It's a bit like, you know, if you think about it, we're in a 10,000 meter race in the Olympics, and we're all running along at the moment, and no one really wants to rush ahead. But when 2 or 3 people do rush ahead, I think then the pace will pick up. Question is it only going to be on the last lap, or can we do it a little bit earlier? And that's certainly an issue for us, because we're not going to go and develop our own CBDC. In the end, we're going to look for products that are already out there. We're going to listen to the private sector and ask them, what do they want in the sort of for a CBDC? What sort of characteristics do they need for it? And then really think about the products that are out there that will give us that sort of design.
That's great. I like this idea that all the central banks are on a gentle jog at the moment on sort of lap 2 or 3. And yeah, the pace is only going to increase, I guess. And maybe just moving towards that final section then, in terms of how this is going to come to market and also how quickly. Maybe just starting with you, Peter, when do you think this is going to happen here in Europe? And again, how do you think it's really going to take place? How quickly is it actually going to be used by people in the real world?
Well, I think it's not going to be as quick as I would hope, because I would hope it to be next year, but I know it won't be next year. I think more realistic expectation for a central bank digital currency to emerge in the EU market, let's say a digital euro, would be 2025, 2026. Now, that's still a long time from now. But on the other hand, it's not that long. It's 4 years from now. And that is because this is a major technical and political enterprise. And the European Commission, but also the ECB, need to put a lot of things in motion, legal framework for it and so on. And we want to get it right rather than get it fast. Because if we want to get it too fast, we may get there, but we may also make mistakes which can end up being quite expensive. So we are in this race. I don't think it's a 10,000 meter race. I think it's actually a marathon. And we're in the peloton, we're running ahead, but we're watching the others. And if someone tries to sort of surprise us and pull out, we'll pick up the pace, because we want to win this race.
So I'm not sure wants to trip over potentially. So maybe the same question for you, Andrew. How quick is this going to happen? And again, how is it actually going to be brought into people's, digital wallets or digital pockets, I guess, in this scenario?
Well, I agree with Peter. It's not going to happen over the next couple of years. It's going to be a little bit longer than that. My guess is that there are developments going on that may sort of push us forward faster than we think about it. If you look at some of I'm just reading in the newspapers the last few days, there's been some innovations in the area of the settlement of FX transactions, the settlement of financial instruments. There's an interesting thing been going on that will sort of you can do an FX transaction and settle it without having to go through CLS, through sort of DLT technology. If they were to come to us and say, what we really need, the private sector, is a central bank digital currency, I think this would be a big push. So actually, although we're thinking about the retail sector, and this is more wholesale sector, I think this could be the push that gets central banks moving, because sort of intraday credit risk in settlement of securities and FX transactions is a big issue. And there's plenty of money for people to produce those products out there. This is one of the areas that has lots of money to put a lot of research into it. Could they come and be the catalyst? Yes, I think they could. And then we'd have to say, yeah, we have to be part of that move. But again, central banks, unfortunately, we do move fairly slowly. So it's still going to take time.
Sounds perfect. And Dr. Kukies, same question for yourselves. How quickly is this going to happen, and how will it become real in Europe, do you think?
Well, the ECB has already announced a time plan, so sort of two-tier approach of feasibility and architecture and robustness check and input from all stakeholders, and then a second 3-year period of actual implementation. And I think that's realistic. So, so the big problem with the timeline is, of course, that during those 5 years, the private sector will innovate massively, and the convenience with which the private sector is now facilitating payments will only increase in the next 5 years, because, of course, it's a growth area, and a lot of companies, financial institutions, are investing. The automotive industry is getting into payments. A German car manufacturer announced a new test case where you can basically use the car as a wallet and do a lot of payment activity from within your car. So that the space is only going to get more crowded, and a lot of capex is going to go into solutions. And of course, 5 years down the road, the challenge for the central banks to actually find customers for their CBDC offerings will not be trivial. But as Andrew said, very likely that won't even be the dilemma of these central banks. They'll just delegate the consumer interaction and interface to the private sector and deal with those institutions that they already deal with right now.
That's a good message maybe to end on, that clearly this disruption and disintermediation is coming, but maybe we shouldn't be too worried. We should see it as an opportunity to support a lot of the work you're doing. And Celia, I've seen the chat very much blowing up over the last 20 minutes, where there's a lot of, I think, excitement about what you're all doing from, again, governments and central banks. There's also a clear view that the private sector is not going to slow down, and whether it's Meta and their partnership with Paxos or others, there's definitely going to be developments in those couple of years. I personally back you as the governments and central banks, though. I always feel that a good way of looking at money is it's whatever the governments tell you it is, fundamentally, or the people with guns. So essentially, you know, if you guys tell us we need to use CBDCs, we will. And I think that we'll continue to support and watch this space. So thank you very much to Deputy Governor Abir. Thanks very much to Peter. Thanks very much to Dr. Kukies. It's been, as always, a fantastic conversation. And again, we look forward to hopefully seeing each other in real life in a couple of years' time, and maybe buying a beer at the bar using a CBDC of one form or another, whether we're in London or in Brussels or in Tel Aviv on that day. But thank you very much again, all of you, and back to you, Daniel, to continue with the agenda.